Alright guys, welcome to another video. This one was suggested to me by someone in the DMs, and it is about liquidity in the markets, what it is, and how I use liquidity to sort of just read price action and how it goes hand in hand. So for the market to move, you need two things, right? Volume and liquidity, right? So volume can come from news events, market opens, things like that. Liquidity is, I see it as points where, you know, like a Formula 1 race where you do pit stops so the car can keep going on the race. So if you see a huge range that needs to get filled, it's likely not going to get filled unless there's either huge volume like a session open or a news event, or liquidity. And liquidity is these points on the chart. For example, you can see where it's grabbed liquidity, and the way Forex market moves is it grabs liquidity to move in the opposite direction, grabs liquidity to move in the opposite direction again. So right here on the chart you can see on this higher time frame 1 hour, you can see these wicks, right? For example, wick, this is probably a little bit of liquidity here, actually not that one. Here's liquidity, here's liquidity, here's liquidity, right? So these, where it's like you get a big rejection wick, it's grabbed liquidity, it's tapped into a certain area, that's your liquidity now to move down, right? Boom. Then obviously you consolidate because the market hasn't got a direction, and then before this market wanted to really push up over here, we came down and grabbed a lot of liquidity down in this area, right? This area right here. So that is liquidity. It's like you're grabbing fuel, or you're doing a pit stop to continue moving in the direction you want to go. So here it came down, grabbed all this liquidity, then shot up. And to keep shooting up like it wanted to do, you had to keep grabbing liquidity, because a car can't run on like the same fuel forever without having to top up. You know, you go to a petrol station or something. So it wanted to go up, it came down again to grab liquidity. That's your car stopping at the petrol station, and then boom, shot up again. Came down, grab liquidity again. This is like your car again. You're driving on a big journey. You have to keep going to the petrol station. Boom, you grab liquidity in these certain areas or blocks, and then you push up again. So that's how I I don't just use like liquidity, but like you can see, you know, if you're bullish for the day and you're looking for buys, you can look for like candles to grab liquidity, and you can anticipate those liquidity areas by looking at maybe chart on the left or like zones. So you can see on the left, you can see where other candles previously grab liquidity, and this could be an area of like interest for you, because if previous candles grab liquidity there's probably a point where the new candles will do it also. And then for example, like in this block here, you came up, this one came back down to grab liquidity in the same area and pushed up. And with that, you can actually slowly, as you get more experience in trading, you can sort of anticipate what areas is going to grab liquidity, and then you can get a sort of sniper entry, wick entry type of thing, where you're looking for, say you're bullish on the day right here, and you know this area is where it grabbed liquidity before. So we're bullish, and then we want to anticipate our best entry, or like a wick entry, a sniper entry, to go up. So we'll wait for the liquidity to come down and hit that same block right here. And if it does, then you can place a buy, maybe a stop loss below the bottom of this wick, and then obviously hold it to continue going up if that's what your strategy is. But you wouldn't just use this, right? You'd use it along with closures, or like along with other things based on maybe structure, or however your strategy is. Mine is I like to look for a closure. So if the candle 1 hour closes above, and then and it's looking like it's going to go up, if I wanted to get that sniper entry, I'd wait for the next candle to grab liquidity in a certain area, enter my buy for it to go up. So yeah, that's pretty much what it is. It's like fuel for a candle to keep going in the direction it wants to go in. So it has to obviously do a pit stop in the opposite direction, which is the liquidity grab, and then you boom, carry on pushing in the direction that you want it to go in the overall trend or time frame. So I hope that made a bit more sense, and yeah, if it did, then hit the like button, subscribe. I'm gonna keep making these Forex tips and things based on what people ask me or what ideas that come to my head. But yeah, you can use it to your advantage, and just it's something to look out for when you're looking at the chart.